Well, it's beginning to look a lot like FOMO. The Tesla is off to the races this morning, up over 3%, going up over 330 at the last check. So we'll see. Is this a beginning of folks that are thinking they better get in before the announcements on Wednesday, because it's probably going to be a really good earnings call. That would be my guess. We're probably going to hear about the new Model Q in some more detail in terms of the timing. Maybe we're probably going to hear about Robotaxi expansion. I mean, these are the kinds of things people are going to be expecting. So there could be missed expectations as well. We'll see what happens as the day gets closer and closer. The earnings so far for other companies are coming in quite strongly. The banks have come in quite well. Netflix, great review, earnings call. General Electric, TSMC, everything's looking good so far. So as a result, the S&P hits another record at 6,315. That's intraday. We'll see if it holds to those kind of numbers for Friday. But right now, things are looking good in the overall market. Dow's down a tad, but the rest of the market is up this morning. This is from investing.com this morning. Tesla's competitive edge lies not only in the products, but in the culture, the strategic, the technological alignment that legacy automakers struggle to replicate or even come close to, according to Morgan Stanley analysts. By the way, I added a few words in there. In a wide-ranging note released on Friday, the bank stated that Tesla's dual role as both a car maker and a tech company affords it unique advantages, particularly as cars evolve into AI-driven vehicles. Maybe this is why the stock is up this morning. The recent amping up of the AI robotaxis talent war is a key reason why we expect Tesla to host an AI day in the not too distant future, said Morgan Stanley. Oh, that would be lovely. Maybe an AI day. Maybe we could have a battery aspect to that AI day, because batteries are key. I don't know if you've been reading, but here's we got this book coming out. Okay, well, part of the reason for the book is everybody's talking about this. Eric Schmidt, the founder of Google, he was on yesterday on a podcast, and basically it's energy equals intelligence, or energy equals the future. I mean, you have to have the energy in to get the output out. And so batteries are a big part of that. Anyway, an AI day with a battery sideline or a battery portion. The event, they argue, would serve as a powerful recruitment tool amidst escalating competition for top engineering talent. I'm sure you've heard about that, with Meta paying $100 million signing bonuses and $100 million a year for some of the top talent in the country. We're not talking about like one person or five people. We're talking about, I don't know, a dozen or more. The analyst also praised Tesla's minimalist approach to autonomy. While rivals embrace sensor fusion with radar and LiDAR, Tesla is doubling down on the camera-only system approach. Annoyingly, Elon is right, said a vision expert at a rival autonomous vehicle firm quoted in the note. Annoyingly, Elon is right. Elon is right? Oh, no, not that. And this was from a competitive company. Morgan Stanley drew an analogy to two baby Tarzans, one over-equipped, the other giving nothing to argue that the other one given nothing to argue that Tesla's stripped-down sensorial approach could yield faster learning and long-term superiority. So I guess the idea would be the baby Tarzan's given everything, and so it doesn't need to learn how to be good, but the other baby given nothing had to get out there and struggle and become equipped. The bank also questioned the potential impact of growing government involvement in strategic industries. While nothing the U.S. Department of, I'm sorry, let me do this again. While noting that the U.S. Department of Defense's investment in rare earths producer MP Materials, as we've been reporting here, Morgan Stanley asked whether further direct state ownership in strategic sectors could unintentionally stifle homegrown organic competition. Ultimately, the analysts argue Tesla's sensorial parsimony, sensorial parsimony, talent strategy, and long-term autonomy vision are underappreciated by investors and remain key to the company's potential lead in the robotaxi and humanoid markets. This from Barron's this morning. Tesla stock, by the way, I agree with everything they just said. Barron's says Tesla stock rose early Friday as investors weighed new import duties on the electric battery maker material from China. Shares of the car company were led by CEO Elon Musk, rose 0.4% to 320. That was a little while ago. We're now 330. Last time I checked, while S&P 500 and Dow Jones Industrial Futures were up less than 0.1%. Getting there could depend on a reaction to an import levy on the EV battery material on exactly one EV battery material. The Commerce Department on Thursday ruled that China's illegally dumping graphite into the U.S. An anti-dumping duty, which is similar to a tariff, was imposed at 93.5%. Well, graphite, by the way, we can actually do a lot of graphite in the United States. We just don't. And this might actually be another thing to help some of the coal companies, because the coal companies can get graphite from their, I got to look that up someday, tailings. Anyway, the effective tariff rate for graphite is now 160%. China's the largest producer of graphite. It's interesting, though, they also were reported as having started to buy rare earth materials from Brazil. Are they trying to corner the market? What's going on there? As for EVs, graphite is used in batteries. Tariffs on imported materials and higher battery prices resulting from tariffs will raise costs for battery makers and battery buyers. Most EV makers, including Tesla, are both doing both. Tesla didn't respond to a request. The overall impact on the cost, they buried this lead way down. The overall impact of the cost on an EV maker, however, will be small. An EV might have 100 to 200 pounds of graphite in its batteries total. Graphite products can cost $1,000 to $2,000 per metric ton. A 160 price increase could add roughly $200 to the price of the EV at retail. Gary Black took a poll. He says, what is the main reason that Tesla stock was down and significantly underperforming the NASDAQ year to date? The vote went this way. It said because delivery estimates are down. 19.1% thought that was the reason, because Robotaxi is not proven yet. 9.3% said that was the reason. Elon's political rhetoric, half the folks thought it was that. And investors don't get it. 19.7% said that. Investors don't get it, and Robotaxi is still not proven, would be way more important in my book than Elon's rhetoric. Nicholas Shanks says this. He goes under the handle of Nick Shanks. None of these, he says, are the reasons. Oh, he agrees with me. The real reason for the present underperformance is past overperformance due to exceptionally foresighted retail and sometimes Wall Street analysts. So yes, not we all, but there was a massive run-up. Remember, a massive run-up to 488, surpassing my estimate of 410 and Brian Wang's estimate of 450. Both of us were low, and it went all the way to 488 in the intraday trade, 480, I think, for the close. It was a little over exuberant, which happens to Tesla all the time. So you have to look at where we are now in counter-distinction to that kind of over exuberance that took place at that point. Anyway, he says the price right now is both above what results-focused, backward-looking analysts would value it at, yet below how a VC would look at it. In other words, here's how I see it. Tesla is perfectly valued between those two sets of investors and traders. And if you believe that Robotaxi and Optimus are going to happen, then you think the future is 10x to 100x from here. If you don't, but you think that energy and semi, and decent sales from all the models, Sexy and Cybertruck, everything's going to kind of point towards good news in the future. Well, then you probably think the stock is pretty well priced right now, and there's potential for it to go up from here because of Robotaxi and Optimus, but you're only thinking that's going to be a nice increase. From Muskonomy this morning, breaking: Tesla is now texting owners about upgrading their vehicles for the Robotaxi program. So in other words, This is not from the Robotaxi team directly, but confirms Tesla's prepping or preparing customers for the next step. So what they're doing is they're taking people who have signed up for Robotaxi when it comes to their neighborhood, and they're testing, sending out they're testing texting. They're testing, sending out a text to them saying, hey, maybe you'd be interested in, hey, talk to us about anything you want to, like even a new car. This is Randy Kirk. Please hit the like, subscribe. You know what to do, right? Do I have to tell you? Okay, I'm going to skip it for today. Oh, you know, a new thing I'd like you to do, and lots of people are doing it, sign up as a reader for Brian Wong and my new book, our new book about AI, super AI. It's going to be amazing. And if you'd like to read the book before it's published and give us some commentary, not looking for punctuation. We're not looking for, word use. No, we're looking for logic. We're looking for facts. We're looking for, did you understand it? We want this to be understandable to everybody. We want it to be okay. Somebody got a 12 senior high school education to be able to read it and get it. Okay, so those are the kind of feedback we're looking for. So if you'd like to do that, send it to my email. My email's down in the information below. Just email me and say, yeah, Randy, I'd like to be a reader. Waller, one of the governors of the Fed, has been, I think he's got his hat in the ring, for the next Fed chair. But he put forth his most forceful argument yet for an immediate rate cut in July, 2 weeks from now. He said, we are close to the target. Economic growth has slowed and job gains are overstated. He says private sector payroll gains are near stall speed and flashing red. With inflation near target and upside risk to inflation's limited, we should not wait until the labor market deteriorates before we cut the policy rate. The Fed's current policy rate between 4.25 and 4.5 is too high given the underlying economic fundamentals. He says the data implied that policy rate should be about neutral and not 1.25 to 1.5 percentage points above the 3.0 neutral rate that we should be at. So Trump is saying, hey, we need to drop it down by 3%. He's saying, no, overall, we should be down about 1.25 to 1.5 below where we are right now. And if you want to get a little bit, stimulative, you'd have to drop even more than that. Waller also dismissed concerns that the Fed should wait to see how tariffs affect prices. Tariffs are one-off increases oh, really? Tariffs are one-off increases in the price level and do not cause inflection beyond a temporary surge. He quoted Randy Kirk. Standard central banking practice is to look through such price level effects as long as inflation expectations are anchored, which they are. The Fed has just 4 meetings left this year. Waiting until September to lower our rates, Walter argued, would put the Fed at risk of falling behind the curve, especially if the slowing of the economic and employment growth were to accelerate. If we cut our target range in July and subsequent employment and inflation data point towards fewer cuts, we could have the option of holding policy steady for 1 or more meetings. He makes a great argument here. Housing management. Okay, that was it. I didn't put any mark here to let me know this is a new story. All right, so anyway, I totally agree with Waller. Very smart, setting himself up. He wants to be the next Fed chair. Housing managed to beat on both permits and starts. Wow, the amount of beat was small, but it's a bit surprising right now, given how the housing climate is not great. So building permits, privately owned housing units authorized by building permits in June, seasonally adjusted 1.397 million. This is 0.2% above the revised May rate and also 0.2% above the expectation. Expected was about 100,000 fewer, maybe 200,000 fewer. No, 100,000 fewer. Single families authorized in June were at the rate 3.7 below revised May figures. Authorizes units in buildings with 5 units or more were at a rate of 476,000. So apparently the rentals are doing a little better than the single family dwellings. Housing starts, privately owned housing starts in June were slightly better than expected, 1.3 million at a seasonally adjusted annual rate. This is about a couple 100,000 more than what was expected. And then housing completions, those were actually down 14.7 below the revised May estimate, and 10% below June of last year. So the completions are not doing great. So maybe they're going slow. I don't know. We've got the Doge cuts passed by those $9 billion that has been talked about now for what, 2 months. So we've got rescission, right? Rescission. This hasn't been used forever. The government hasn't used rescission. I don't know how long it's been since if they've ever used rescission. I forget. It's either a very long time, like 5 decades, or maybe it's never. But so this rescission whole idea is new. So what the Congress wanted to do is they wanted to test it out. They said, hey, White House, send us a rescission package that you like. Now, you know what that rescission is to do, right? That rescission is to make the Doge cuts permanent. Because what's happening is that the Congress has passed bills and they say, hey, here's what you need to spend on education. And then Doge comes along and says, we don't need as much money as that for education. And past congressional rules have said, well, if you don't spend it, then you can't just keep it. You're going to have to spend it. You just spend it on something, just throw it away, just do whatever you want with it. And so the rescission idea is, no, Doge found these cuts. And so now we need a congressional act to make sure that we can not spend it and that we can count it as not in the budget, or take it out of the budget. So there's $9 billion. So what they're doing now, this was a test. Now that the test is over and Congress has done it, and by the way, PBS was part of that. Oh, after 40 years, finally got rid of PBS tax. I don't care. PBS can stay on the air. I send $10 a month to these guys. I watch PBS. I don't watch their news, but some of their other programming is fine. Okay. And so I'm not against PBS. I'm just against them using tax dollars. Anyway, so we'll see what happens with this. All right. So they're supposed to send more rescission bills, maybe 150 billion more, maybe 200 billion more in rescissions. Wouldn't that be lovely? And I feel like Elon should be posting a congratulations on this. Should be giving the strong arm, symbol that he likes to use so much. So as a result of this and other stuff that Trump is doing, he's popped back up to 50% approval after dropping to 47%. And apparently nothing is, he's getting a little bit Teflon now with regard to the attacks against him. Some of the other polling that's not Rasmussen, other polling is showing him that he's got a 90% rating with Republicans, which is like an all-time high for him. And it's rare that anybody gets 90% of anything. Drewflation this morning is at 2.04. I've got a new number I'm going to report each morning. So the 2.04 is the overnight annualized rate. Okay, does that make sense? So what happened right now is giving us a 2.04 that if you annualize that out. But then they give a new number now, which is what are we at compared to last year, which is more like what the CPI does. And that number is 2.19. Okay. And really, really quickly, food is up, housing is up a little bit, but both from very low numbers. Utilities and health are both flat, but both are showing some upward movement right now. Transportation is down. Household durables are up a lot, and that's 4.5%, and that could be because of tariffs. Same thing with alcohol and tobacco. Clothing and footwear are both flat, around 2%. No tariff, nothing happening with the tariffs there. Education is moving up a little bit again, around 2%, but it was lower than that earlier. And recreation and culture moving very slowly up to 2%. And then personal products, deodorant and stuff like that is up. It's around 3%. So overall, looking good. And the VIX this morning is very happy, sitting at around 16%. All right, so let's look at the VIX real quick. Yes, 16.36. Okay, Tesla still up 2.61% at 327. The high this morning was 330 and 71 cents. It's also just curved like this and starting back up again. Wouldn't be surprised to see it since it's already hit like the 330 range. It could certainly go back up and tickle that number. That would be a number that I think, if I recall correctly, that would be one of those numbers, right, where there's a high or a low. I haven't looked back recently. I haven't had to. We've been down in the dumps recently. However, all of the rest of the markets, while Tesla, has gone down a little bit, maybe it's kind of following the market is softening. Don't know why, but it is softening. We've got the Dow down 0.37. It was down earlier, but going down more. NASDAQ, which was up, is down 0.09. S&P 500 is down 0.3. It was fully up in the green. And the Magnificent Seven all down now, except for Tesla and Google. And Google's up only a little tiny bit. So Tesla going completely counter to market right now. Again, maybe it was that new report that we just read you. Cathie Wood's, the ARK Invest stocks are mixed, very mixed, completely, mostly up, but also trending down again. Maybe the information, maybe everything that came, you know what? Consumer confidence came out and I forgot to go back and get it. Let me put you on pause. I'm going to go get that consumer confidence information. I'm going to just pause you real. This is consumer sentiment. Remember, this is for the half month, so it does not take into consideration very many people. Consumer sentiment was little change from June, inching up 1 index point to 61.8, while sentiment reached its highest value in 5 months. It remains a substantial 16% below the excitement after Trump was elected. Consumers are unlikely to regain their confidence in the economy unless they feel assured that inflation is unlikely to worsen. If, for example, trade policy, etc. Year ahead, inflation expectations fell again for the second straight month, plunging to 5%. From 5% to 4.4 this month. Long-range inflation expectations receded again also, and that's down to 3.6%. All right, so that certainly wouldn't cause the markets to go down, okay? So that ain't it. I don't know what is it, but that ain't it. So that's good numbers. The market should be happy with everything that just happened in that report. Okay, let's go ahead and look what bonds are doing. Maybe bonds are going. No, bonds are down. Bonds are down 3.2%. That's good news. Sitting at 4.43. We have got oil up a little bit this morning. 94 cents, $1.38%. It's 68.47. Now that's getting a little up there. That's not good. We'd like to see that one fall back. It says on Mideast risk and tight supply. That's the headline. Natural gas up 1.72 at 3.6, a little bit in the higher end of its range. Gold up $16 at 3,361, so a little high. Silver back up to 38.63, but still $1 under its all-time high. And copper up 1.2 at 5.58. Now going back towards its all-time high again. And you've got the dollar clings to weekly gains. There you go. That's the headline. Bitcoin down 1,670 at 117.8. And that's what's going on. So anyway, I'm not really 100% sure. What we've got is later on today, Larry Goldberg for sure. He'll be early, probably about 4:15, 4 o'clock, something like that. Larry Goldberg. And then tonight, I'm not 100% sure. Could be Phil Beisel. It could be 𝐒𝐚𝐲. It could be Brian Wang. I've got all those guys. Whoever it isn't, then those will be on Saturday. All right. So you got all those lined up coming up over Friday and through the weekend. So look for those. Last night, we had a great time with 𝐒𝐚𝐴 as always. So you probably already watched it because only about 1 million people did. But if you didn't, I'll put the card right up here for you to go check that out. Okay, that's all I got for one more time on Tesla. Still dropping just a little bit. 320, call it 327, but still very strong morning. We'll see what happens on Monday. It's been great talking to you.